Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. Coinbase is the stock that investors love to hate right now, and the recently reported fourth quarter earnings report kind of had something for everybody. Usage on the platform, specifically trading of cryptocurrencies, was down. That's seen as a negative for a lot of investors' standpoint, but there were some positives, and the one thing that I was really looking at was growth in subscription and services revenue. That's really the infrastructure piece that Coinbase has been building out over the last few years, and also operating costs. This is one of the companies that did layoffs, and big layoffs earlier than most of their tech counterparts. That seems to be paying off already. So let's dig into the numbers at Coinbase and try to suss out exactly where this company is going. I'm Travis Hoium. Thank you for watching Riiv Investing. Subscribe here on YouTube. I really appreciate it. So let's dig into Coinbase's results. What we have here is Coinbase's shareholder letter, and this really dug into a lot of the details of Coinbase's business. One of the most detailed shareholder letters that you'll see out there. But you can see here, revenue, $605 million and a loss of $557 million. That's obviously a negative when you slice it, especially when you look at a year ago when the company made $2.5 billion in revenue and $840 million in net income. But I do want to highlight a few positives in the quarter. In this segment, they break down where revenue comes from. So transaction revenue is going to be the exchange. This is what a lot of people identify Coinbase with. Customer revenue, $308.8 million, down from nearly $2.2 billion. So what that's telling us is that retail customers are simply not trading crypto in anywhere near the volume that they were a year ago. That's not a huge surprise. We've seen that over the last few quarters, but that continued to be the case. Institutional revenue is also down. Typically, Coinbase's institutional revenue is a very small percentage of the trading volume that they're doing there. They've actually done pretty well on an institutional volume perspective, but that's not showing up on the revenue side, which isn't, again, all that surprising. Transaction revenue overall, $322.1 million. What's more notable here is this subscription and services revenue segment. This is really what I think investors should be watching over time. And there are a few big highlights here. The one that I'm looking closest at is interest income, $182.2 million. That's up from just $7.6 million a year ago. And for the full year, $327 million. This is not only interest that Coinbase is making on the $5.5 billion of cash in equivalents that's sitting on the balance sheet. This is where the interest from Coinbase's stake in the USDC token, or the Center Consortium, is actually the company that's running it. They have a 50% stake in that company, and they're generating revenue from the interest of the cash that is backing those tokens. So the money backing those tokens isn't just sitting there not doing anything. It's earning interest through things like treasuries and other low risk assets. So as interest rates go up, the earnings on those assets continues to go up as well. We have seen that over the last year. You can see this number consistently rising. We're now at the point, I've done some videos on this in the past, where I think this could potentially be an $800 million per year business for Coinbase if interest rates stay about where they are now. So this is a huge business for Coinbase, and they basically don't have to do anything to generate this kind of revenue. So great revenue source from them. Blockchain rewards, custodial fees, all holding up relatively well. Staking is included in here. Not a huge growth in revenue source for them, but I would look for that to be one of the things that is going to be increasing in importance for Coinbase over the next few years, is that staking revenue that they're getting specifically from institutional clients. So worth keeping an eye on that as well. Overall, total subscription revenue, $283 million, up from $213 million a year ago. Now, management did also give us this chart. This is the revenue as reported for subscription and services revenue, but they adjusted that to Q4 2022 crypto prices. So as the prices of cryptocurrency have fallen, some of the things like staking and blockchain rewards have gone down as well. The value of those things have gone down as well. So if you normalize the price of cryptocurrency to that Q4 number, this is what the growth rate looks like. That's much more impressive. Now, take that number with a little bit of grain of salt, but I do think that's an interesting way to look at the growth of this segment of the business. Again, most of this growth is from increased interest revenue. if interest rates do go down or something like the USDC coin lowers, is not as commonly used, that's going to be a negative for the business. So two things to keep in mind there. Operating expenses are the other thing to keep an eye on for Coinbase. Transaction expenses, now just 14% of transaction revenue. So that's a really positive there, down from 20% a year ago. Sales and marketing costs now $93.1 million, down from $244.6 million. You might remember that Coinbase had a big round of layoffs last year and then did another round in January. In total, cut about 40% of the staff there. So they should have much lower operating costs. And they've also said that they're lowering their stock-based compensation going forward. So we'll see that start to hit later in 2023. The reductions in technology and development, general administrative, haven't quite hit in the same meaningful numbers yet, but I do want to highlight the cost, nearly $1 billion for the fourth quarter of 2022, but guidance is for much, much lower costs in the next quarter. Here's that guidance number, $625 to $675 million, including $200 million in stock-based compensation. And again, subscription and services revenue is expected to grow from $282 million to $300 to $325 million. So both the subscription and services revenue business continues to improve. That's a positive. Operating expenses continue to come down. Another positive. Let's look at the impact that those two things have on cash. Here's Coinbase's cash walk. So this is the start of third quarter, September 30th, 2022, $5.65 billion in cash on the balance sheet. You can see there is adjusted operating cash, negative $171 million. There's things like capital expenditures, some M&A, crypto investments. At the end of the quarter, $5.5 billion in cash. So not a very significant amount of cash burn, despite the fact that Coinbase is still losing money. And remember, the sustainable businesses like subscriptions continue to grow and operating expenses continue to come down. I don't know if Coinbase will get to the point in the next quarter or two that cash burn goes to basically zero or maybe even generating cash, but we're getting to a very sustainable point for Coinbase. And I think that's really telling given how weak the crypto market is right now. The final thing I want to show, and I'm not going to go into detail on this, but Coinbase did a really great job showing credit and counterparty risk after the collapse of FTX and the questions surrounding Binance's balance sheet. This is really great to see for a company like Coinbase. They go through all of the counterparties that they have on the balance sheet, loans to customers, collateral posted, cash held at third parties. You can see where basically all of their assets are sitting and where there might be risks on the balance sheet that we're not thinking about as investors when we just look at a 10K or a 10Q SEC filing. So another thing that the SEC was looking for, Coinbase provided a lot of information here. So worth looking at if you're worried about Coinbase's counterparty risk. The theme here for Coinbase in the fourth quarter is the company getting to a sustainable operating point. $5.5 billion in cash on the balance sheet is a really big number, but if you're burning that cash at a really rapid rate, it's not sustainable. The company burned about $140 million in cash. That gives it 5 to 10 years of cash on the balance sheet just on those operating metrics. And we see that operating costs continue to come down. So I think there are some positives for Coinbase. At the end of the day, if cryptocurrency, Web3, NFTs, if all of these blockchain concepts don't become a big piece of our digital future, Coinbase is not going to be a great stock to own. But if they do, I think Coinbase is going to be one of the leaders, and this will be a great stock to hold for the next 5 to 10 years, if not even longer. This is a downtime in the market, but that's when you want to buy these disruptive companies and these disruptive stocks. That's why I own shares of Coinbase. And I'm looking to add more based on what I think was a pretty good earnings report for the fourth quarter. So what are your thoughts? Leave those in the comment section below. Follow Riiv Investing here on YouTube, and I'll see you here next time.